This is Nightly Business Report with Sue Herrera and Bill Griffin.
So close, the S&P 500 finishes just shy of a record, and next week could be a doozy with a Fed meeting, a jobs report, and a heavy dose of earnings. Bargain hunting, it is hard to do with stocks at lofty levels, but our market monitor has a list of stocks that he says are worth buying. And gaming the game, tonight an investigation into an issue no one wants to talk about in the gaming community and why it is hurting profits. Those stories and more tonight on Nightly Business Report for Friday, October 25th. Good evening, everyone, and welcome. Bill has the evening off. The stock market flirted with a record to end the week. The S&P 500 briefly traded above its all-time closing high, but ended the day just shy of that level. The optimism on Wall Street today was driven by U.S.-China trade and a fresh batch of earnings. The Dow Jones Industrial Average was up 152 points to 26,958. The Nasdaq added 57, and the S&P 500 rose 12. All of the major averages were higher for the week. And now it's time to look to next week, which could determine whether records are broken. Bob Pisani is at the New York Stock Exchange.
Stocks made another run at record highs, coming up just short by the close. The S&P, though, is riding a three-week win streak. Trade optimism was the #1 driver behind today's rally after U.S. Trade Representative Robert Lighthizer said the U.S. and China have made headway on some specific issues and are close to finalizing some sections of the Phase 1 agreement. But a couple of other factors helped spur the move higher. First, more signs the U.S. consumer is still going strong. We saw that in solid earnings and guidance from credit card companies like Capital One and Visa. Second, we saw a handful of semiconductor companies at new highs on the back of Intel's solid beat and good outlook for the year. They've been powering much of the year's rally. The week ahead is going to be brimming with market-moving catalysts, including the busiest stretch of earnings season. We'll get reports from tech titans Apple, from Facebook and Google parent Alphabet. We'll get consumer names like Clorox and Starbucks, Alibaba, and the much buzzed about Beyond Meat, along with oil giants like Chevron and Exxon. The Federal Reserve is going to meet to decide upon the fate of U.S. interest rates. Of course, the markets are expecting a quarter-point cut this month, plus the widely watched October jobs report. Economists are expecting the GM auto strike to have shaved off a chunk of the job gains we'd normally see. And plenty of data is on tap as well. GDP, consumer confidence, home sales, and manufacturing, a busy, busy week. As always, investors will be keeping a close eye on trade headlines, easily the single biggest market mover, as we saw in today's session. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And if you're wondering why the Dow is not closer to a record, the answer can be found in 3 stocks. Recent losses in Boeing, McDonald's, and Travelers are holding back the blue chip index, shaving off a few hundred points. So let's turn now to David Lefkowitz to talk more about what lies ahead for the market next week. He is the senior equity strategist at UBS Wealth Management Research. Welcome back. Nice to see you again.
Thanks for having me, Sue.
All right, I'm already exhausted. there's so much on the market's plate next week. And Bob outlined that very well for us. But if you had to prioritize the events of next week, which would be most important to you?
I think for me, it's 3 things. It's going to be continued information about corporate profits, and we'll get the continuation of earnings season. We're about halfway done, so we have a pretty good handle on how the earnings season is shaping up, but we still want to hear some key companies that Bob was talking about and get a final reading on earnings season. The Fed obviously is very important. Look, what the Fed does has a big influence on the cost of capital, the cost of money, the cost of borrowing. So what the Fed does has a big influence on the economy, so that's going to be very important as well. And then I'll be especially looking at the manufacturing sentiment survey. That is a leading indicator for the markets and has been a market driver recently, so that's going to be pretty important as well.
What are you expecting to see in that report? I assume you're going to be looking for any further slowdown in the economy and or manufacturing.
Yeah, I think that's exactly right, Sue. I think there's been some sentiment that the soft patch that we've been seeing in global manufacturing might be bottoming a bit. I think that message came through from the earnings reports that we got in the industrial patch. Some of the weaker earnings results ended up in stocks actually moving higher on a weaker outlook. So that's some indication that investors are looking for a bit of a bottoming process in some of that manufacturing data. And that's going to be important to see if it does come through in that survey that comes out next Friday.
If I can take you back to the Fed, the market is expecting a quarter-point cut, but the language of the Fed chief has been very important lately. What are you expecting to hear from him?
Yeah, not only, I think it's a good point, Sue. I mean, not only is the cut itself going to be important, but I think the Fed is going to be a little bit at potentially a turning point. The way that Fed Chair Powell has been characterizing this is that these cuts that they've done, this would be the third cut of a quarter point each, have been insurance cuts, trying to make sure the economy avoids some of the risks out there around trade, around Brexit, around the slowdown in manufacturing. And it might be possible that the Fed is going to signal that they've taken enough insurance cuts for now, and they may stop and pause a bit and be more data dependent and seeing if the data comes in as they expect, that they may not have to cut any further. So that's going to be a very keen focus for the markets.
All right, David, we'll leave it there. Thanks so much for your perspective. David Lefkowitz with UBS Wealth Management Research. There are reports tonight that the United Auto Workers Union has ratified the labor agreement with General Motors. The new 4-year contract ends the 40-day strike. Some of the union's 48,000 members are expected to return to work as soon as tomorrow. The work stoppage is estimated to have cost the automaker more than $2 billion, and the UAW has chosen Ford as the next automaker to negotiate with. The federal deficit increased to nearly $1 trillion. According to the Treasury Department, the federal deficit rose 26% to just over $980 billion in fiscal 2019. That is the highest level in 7 years. Treasury Secretary Steven Mnuchin called on lawmakers to help the administration cut spending. Consumer sentiment dipped slightly in October. According to the latest University of Michigan survey, Americans are more worried about the economy now than a year ago. But they do remain fairly optimistic when it comes to their own job situation and financial health. Economists watch sentiment indicators closely because, in theory, the more optimistic, the more consumers spend. And spending makes up a large portion of economic activity. Dow component Verizon topped analyst profits and revenue estimates. The largest wireless carrier in the U.S. attracted more customers with less expensive unlimited data plans. It also expanded its 5G services to 4 new cities, now totaling 15 in all. Despite the better-than-expected results, though, the stock fell a fraction in today's trading session. It is time to take a look at some of today's upgrades and downgrades. Dick's Sporting Goods was upgraded to buy from neutral at Goldman Sachs. The analyst cites management's efforts to increase traffic. The price target is $45. The stock is up 1% to $40.36. Booking Holdings, formerly known as Priceline, was downgraded to Market Perform from Outperform at Raymond James. The analyst cited overly optimistic estimates for next year and 2021. The firm removed its price target on the stock. Despite the downgrade, though, the stock finished higher at $2,055.93. Avis Budget Group was downgraded to hold from buy at Deutsche Bank. The analyst there cites softer U.S. pricing and challenging trends in Europe. The price target is $32. The stock fell slightly to $29.90. And there are also a number of price target changes to tell you about. Amazon's target price was lowered at Morgan Stanley to $2,100 from $2,200 following yesterday's earnings report. But the analyst maintains his outperform rating and said its one-day shipping ramp-up was impressive. Credit Suisse raised its price target on Intel to $65 from $58 after the company reported earnings well above expectations. And Oppenheimer cut its price target on Twitter to $36 from $46 while maintaining an outperform rating. United Airlines, which has been one of the top performing airline stocks this year, is now trying to turn around its reputation and customer service. Today, the company outlined changes designed to create a better experience for its passengers. Phil LeBeau has more.
United Airlines CEO Oscar Munoz calls this the next phase of turning around the carrier that still carries a customer service reputation that lags other airlines. So it's making a slew of changes. A new app automatically books stranded passengers in hotels near airports. It also gives passengers a view of what their actual seat will look like on their flight. United's also adding a regional jet with a snack bar in the front, and its fleet is being updated with newer, bigger bins to hold more carry-on bags. Changes United believes will also help employees who have been frustrated with the carrier's inconsistent performance.
We needed to rebuild the trust of our employees before we could rebuild the trust with our customers.
That trust hit a low point 2 years ago when a passenger was dragged off of a United flight that was oversold. It made United the poster child for those who think airlines care only about profits, not customer service.
It was a watershed moment for us. It accelerated the things that we're meant to do. And so one of the things that we're doing today is kind of introduce those enhancements to people.
So in the last 2 years, United has added more flights in the U.S., especially from smaller cities. It's also upgraded frequent flyer lounges. Along the way, it's attracted more travelers and has grown profits.
If we can plow our improving profitability back into the product, back into the customer experience, that's going to drive higher profitability.
While United has done better in the last year, those who track the quality of airline service say the carrier still lags its competitors, reinforcing a reputation that United still has a ways to go to make the friendly skies even friendlier. Phil LeBeau, Nightly Business Report, Chicago.
Still ahead, finding value in a market near new highs. It's hard to do, but our market monitor found a way. In the news tonight, 2 major wildfires are spreading in California. In the northern part of the state, near Silicon Valley, the Kincaid fire has burned tens of thousands of acres. California utility PG&E said a broken jumper line may have been involved in starting that fire. And an analyst at Citi warns that that disclosure threatens the utility's exit from bankruptcy. That news shaved 30% off of PG&E's value in today's session. Meantime, in Southern California, just north of Los Angeles, the Tick fire closed major freeways. Jane Wells is in Santa Clarita.
I'm here in Santa Clarita in front of one of the homes that was destroyed in the main fire down in Southern California. We have an even bigger fire up in Northern California. The governor has declared a state of emergency in both counties, in both Los Angeles County and up in Sonoma County. And he has set aside $75 million in a new fund to mitigate the costs of these massive power shutoffs, these intentional power shutoffs by the utilities to try to prevent the fires. Is it working? Well, we'll find out. I want to show you something first right here. I don't know if you can see it in the distance. While that home is destroyed, over there you can see the pink on a roof. That's the FOS check, which was dropped by firefighters on these homes to try and save most of the neighborhood, which they did. But here we are, hundreds of thousands of people with their power intentionally cut off in the tech capital of the world. So what sort of technology are we using to try and better predict these fires? Well, there's a couple of pilot programs going on for the first time this year. One of them is called wildfires. It's a $200,000 program out of UC San Diego, and they use cameras and other data to sort of predict where the fire is going. And LA County Fire Chief Darrell Osby told me in this fire, it's working. Listen.
When we looked at the projections, I mean, when we had our press conferences last night, there was a lull in the fire and things looked calm. But the wildfire projection indicated that this is going to take a turn and jump the 14 freeway. And it did exactly what it said it was going to do.
But the big concern is what to do about the utilities, when and where to turn them off. As you can see, they're trying to work on this house, which has also been damaged. Those power shutoffs are going to continue through the weekend. The governor is furious, particularly with PG&E at the way they've handled this, saying it has cost the economy billions of dollars. PG&E is arguing it has actually prevented fires by doing this. Ironically, however, the main fire up in Northern California may have been started by a PG&E transmission line, which was not turned on. Reporting from Santa Clarita, I'm Jane Wells. Back to you.
There may be a new arms race developing. The U.S. is modernizing its weapons systems, and that could mean lucrative contracts for some of the country's major defense companies. Morgan Brennan takes a look at the industry's next chapter.
When China celebrated its 70th anniversary earlier this month, it unveiled new weapons, including missiles, making a lot of American defense experts very nervous. The DF-41 intercontinental ballistic missile is believed to be capable of carrying up to 10 nuclear warheads and hitting the U.S. mainland in 30 minutes. And the DF-17 hypersonic missile, while shorter range, represents a new threat altogether. Both are formidable, but for different reasons. But both strike at the heart of military modernization and what the U.S. will need as a new arms race becomes reality. Let's begin with what America has. The nuclear triad, which currently includes Minuteman III intercontinental ballistic missiles made by Boeing, Lockheed's Trident II, which can be fired from submarines, and cruise missiles launched from bomber aircraft. All are being modernized, but none are hypersonic. The U.S. also has anti-missile systems, including Lockheed's Aegis, which targets intermediate-range missiles, and the Boeing-made ground-based mid-course defense, the only system to protect the homeland from ICBMs. But defense experts warn those current systems may not stop China's new hypersonic missile. Hypersonics move super fast, at least 5 times the speed of sound, but with cruise missile-like maneuvering. Unlike ballistic missiles, hypersonics fly at lower and changing altitudes are harder to see and chart an uncertain flight path, making detecting and intercepting them near impossible for current defense systems. The Pentagon is fielding its own hypersonic prototypes through a handful of programs, largely still in the development stage. But so far, Lockheed Martin has won some contracts, as has Aerojet Rocketdyne and privately held Dynetics. Some early contracts have also gone to Northrop Grumman and Raytheon, which is merging with United Technologies in part to advance this tech. All of these next-gen missiles are sparking a new arms race with China and with Russia as well, which is building its own prototypes. Hypersonics and modernization of the nuclear triad were key topics on contractors' earnings calls just this week. And over the coming decades, all of this could result in billions, if not trillions, of dollars in future contracts. For Nightly Business Report, I'm Morgan Brennan.
Competition hit some of VF Corp's top brands, and that's where we begin tonight's market focus. The apparel maker missed earnings expectations as growing competition slowed sales of its Vans and Timberland brands. VF also reaffirmed its full-year guidance. The shares dropped more than 7% to $84.15. Phillips 66 reported better than expected results driven by higher retail fuel margins. The refiner was also helped by a nearly 20% drop in oil prices during the latest quarter, which reduced gasoline and aviation fuel costs. Shares rose about 3.5% to $114.42. Lower sales in China and higher costs caused the biggest beer company in the world, AB InBev, to miss estimates. The company also cut its full-year forecast. The shares fell more than 10% to $81.83. Time now for our weekly market monitor, who says he is finding value in some overlooked names. Craig Hodges joins us, CEO of Hodges Capital Management. Welcome back, Craig. Nice to see you again.
Thank you, Sue. It's a pleasure being on.
Let's get right to your picks. Century Communities, you're playing, these stocks have to do with the home sales business, the home building business. Why do you like Century?
Century is a very interesting and trades at a very low multiple, but the real play on Century are the millennials. The millennials are just reaching their 30s. And so as we know, when we get into our 30s, we have a family, we buy houses, we buy cars, and that sort of thing. And it's the biggest demographic in history. So there's going to be a lot of entry-level new home buyers for the first time. And Century focuses on the entry level, the low end. And the stock, trades about a little less than 10 times earnings. But I think the next 4 or 5 years are going to be tremendous for home building because we don't have enough homes for the amount that's going to be coming out. And Century is going to be a good way to play that play.
Now, a little bit outside of that group, an airline, American Airlines. Why?
Yes, American has been the worst performing airlines. I know you just highlighted United here a little while ago, which has been one of the best. But we like American in that they've been very, very hurt by the Boeing, grounding of the MAX 8. They've got about 24 of those planes, and there's been about like 8,000 of their flights canceled last quarter. So it's been a real hit to their earnings. Hence the stock doing before. We think that's going to be resolved, if not the fourth quarter, early in the first quarter. And with the stock down 30% versus the average airline stock being kind of flat for the year, we think American has a lot of room to make up. And then let's not forget, Warren Buffett owns 10% of it. So if it's good enough for Warren, right?
All right, let's finish up with Generac Holdings, and that's a play on homes as well.
Yeah, Generac makes generators, and the generator business is tremendous right now. But with all the alternative energy, you see what's going on in California with all the blackouts, the severe weather. So there's a lot more unreliable, electricity out there, and generators are becoming, and that's also a housing play, like you said, in that a lot of people are now budgeting into their new houses, a $5,000 to $10,000 generator. We just had tornadoes go through Dallas in my neighborhood.
Oh, I know.
And there's 16,000 homes that have been without power all week long, but you can drive around, you see the ones with generators, and they're the smart ones.
Right.
So Generac is a stock trades about 17 times earnings, but the next 4 or 5 years should be tremendous for this company.
On that note, Craig, thanks so much. Craig Hodges with
It's my
the Hodges
pleasure, Sue.
Capital. Coming up, gaming the game. Video games are a hot industry, and that means hackers are also trying to cash in. The video game industry is on a tear with revenue on the rise. But there's an issue that many video game developers do not want to talk about, and that is cheating. With more money on the line, hackers try and find vulnerabilities that let players get special advantages. A recent survey by the security company Airdetto found 60% of online games were negatively impacted by cheaters. And many players actually will stop playing if they think that competitors are cheating. Josh Lipton has our investigation, Gaming the Game.
Eliminate the terrorists.
Take a close look. This is the exact same video game, but in the version on the right, the player has special software or cheats that makes it easier to win.
This is the bot behind us. This wall right here, we're going to see him in a second.
In this modified game, you can see the enemy through walls, a distinct advantage. Bill Demirkapa is an 18-year-old recent high school graduate, but don't let his age fool you. He's an expert in hacking video games to create cheats, something he knows could ruin the game.
I don't think that I'm either a good guy or necessarily a bad guy, but I think that a lot of what I do can be interpreted as being the bad guy.
To find cheats, hackers find vulnerabilities in the game's code. It's an advantage people are willing to pay for.
For the higher-end cheats I've made, I've sold them for hundreds of dollars a month. Usually $100.
E-gaming insiders and cybersecurity experts tell CNBC that cheats are a huge threat to the growing video game industry.
Why would you want to play a game you can't win? It's just not fun anymore.
Alex Hammerstone works for information security consulting firm Trusted Sec, which helps video game makers keep their products secure.
Up here, you're buying different cheats or add-ons or things for the game.
He showed CNBC websites where players can buy and sell cheats.
These add-ons can be a lot like a professional athlete using steroids or some other performance-enhancing drug.
From a Halo tournament on the 99th floor of the Willis Tower in Chicago to a 16-year-old winning $3 million at the Fortnite World Cup in New York, the video game industry is on fire and expected to bring in $174 billion in global revenue. But in order for games to succeed, players say developers must stop cheaters.
When I experienced hackers in Fortnite, there was people across the entire map hitting me and headshotting me and instantly killing me, which is pretty crazy.
But gamers say it's uncommon to find cheaters at tournaments with money on the line.
If someone were to hack a tournament, they definitely would probably get disqualified. I'd hope so.
At most tournaments, the organizers control the computers and consoles the game is played on and keep a strict watch. But when it comes to playing at home, it's an ongoing challenge for game makers.
You're sort of fighting a battle you've already lost, because when I have my computer in front of me, I have physical access, so it's really difficult for them to actually prevent me from cheating. And the best thing they can do is make the bar high enough to where it's not worth my time.
Hacking video games was a presentation topic at this year's DEF CON, a hacking convention in Las Vegas with an estimated 30,000 attendees. That's where we met Bill Demirkapa and security researcher Jack Baker.
Because there's so much money on the line now, there has been a lot more of a focus on how can I make money off of that.
Let's say you're a game developer, you're a game publisher. What can you do to try to prevent these cheats?
They watch for patterns, they watch for signatures. There are ways they can look at behind the scenes to see if people are using these things. But a lot of it is still very reliant on users reporting.
Microsoft's 343 Industries is the maker of first-person shooter game Halo.
Halo has never really had a huge issue with hacking, thankfully. And for us as developers, competitive integrity and the experience of players online is crucial.
Epic Games, the maker of Fortnite, declined an interview, instead sending a statement saying in part, "We will continue to pursue all available options, including revoking access to Fortnite to make sure our games are fun, fair, and competitive." Demercapa says he hasn't sold cheats since last year. Today, he has no regrets.
I'm trying to transition more into the information security field. Game hacking has been an extremely valuable learning opportunity.
For Nightly Business Report, I'm Josh Lipton.
Demercapa demoed cheating on Rainbow Six Siege. Ubisoft, the maker of that game, told us in part, quote, "Rainbow Six Siege does not tolerate cheats and exploits used in-game. Players found using cheats are penalized and or banned accordingly," end quote. We should also note that Demercapa's demo was against bots or computers. Here's another look at the day's numbers on Wall Street. The Dow was up strong, 152 points. The Nasdaq added 57. The S&P 500 rose 12. All of the major averages were higher for the week. And that is Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us. Have a great weekend. We'll see you Monday.